All right, YouTube, Stocks by the Numbers. Welcome back. Today's Friday. We have the holiday weekend coming up. I wanted to do a quick update here on a stock we looked at a couple of times, and now as we see today, hitting new 52-week highs. Name of the company, Safe Bulkers Inc. Ticker symbol SB, listed here on the New York Stock Exchange. Shipping company. And as we see here, I initially brought it to you August 31st. Stock was about 320, 325. Of course, it immediately fell off a cliff after I said, in my opinion, it looks fundamentally sound. But like I always say, if I like it at 3.25, I'm going to love it down here at 240 and 230, right? And as we see, we bounced off that level, immediately rallied to about 384, bounced around. Looked like, in my opinion, what was potentially setting up an ascending triangle, meaning we should have broke higher. However, it began to pull back and sell off here, perhaps because it was international. This is a company, I believe, Monaco. So most of the year, our stocks here in the States were absolutely raging, right? And now, as you see, September, we make the bounce into October and November here, and as we see, the stock just completely took the next leg higher. There's a one-year chart. We can see it just got above the one-year fib level of 406 there, hit a high today, 410, new 52-week highs. And basically, again, this in turn basically solidifies what I'm talking about when I talk about long-term investing, excuse me, long-term investing, and of course utilizing the Buffett method to do so. Now again, I can appreciate the fact that this was potentially a company that's flying underneath the radar that a lot of people may not know about. So I understand if we can't compare this to, watching something like Coca-Cola stock and waiting for it to sell off to, buy it at a discount for the longer term. But overall, this is a company that, again, I looked at the numbers, and again, I'm not doing anything special. I know I have been getting a lot of these calls right over time, as you're seeing now, which of course not only makes you money off your capital gains, and more times than not, we're looking at stocks that pay dividends as well. So you're collecting dividends, and if you want, you could do the DRIP, the DRIP, which stands for the Dividend Reinvestment Program, to buy more shares. Or on the flip side, of course, you can just be collecting that slight amount of income off of the dividends, off of the shares. But either way, again, with these long-term holds, I understand this is not trading, and you did not see 100% return in a week. However, by beginning to buy your shares here at 3.25, and let's just say hypothetically you never bought more shares, you are up, like 25% here, potentially even more. Actually, you're up close to about 30%, 33%. And of course, if you choose to liquidate here at this point, this would now be, of course, a long-term hold, which means you're paying about half as much in capital gains tax. So that's why I know a lot of younger people are more active with the market. So when I make a video talking about a stock, I can appreciate the fact if you guys are like, oh no, it looks like crap, it's going to drop down to here, or I think if it runs up here, it's only going to hit to this point, and then it's going to start pulling back, blah, blah, blah. Remember, that is more for you guys, for the shorter term trading aspect and view of the stock. And of course, sometimes I make short-term calls, sometimes I make long-term calls. But usually when I make these videos, I am doing like an overall broad view, my overall analysis of the stock, and basically just saying that, in my opinion, whether a stock should technically be worth more and will most likely grow over time, or if a stock is potentially overvalued and maybe overhyped and will most likely continue to sell off over time. Something like we saw with Luminar Technologies, ticker symbol LAZR. But right now, again, about 3.25. We had the nice dip down. We had a big rally up. We've been bouncing around. I think I did a video around here like May 5th, right before these earnings came out. But as you see, got beaten up again, back down to sub 3, and now, boom, we climbed up here, 409. They announced they're grabbing a ship here, a nice new Japanese dry bulk vessel. And of course, back here about 3 weeks ago, at the end of November, Safe Bulkers plans to repurchase up to 5 million common shares in open market. So that is looking to account for about 4.5% of the outstanding shares and 8.1% of its public float. So obviously, and they're able to do that with the cash that they currently have on hand now. So in my opinion, that kind of obviously points us to the conclusion that if a company is willing to announce that they're going to buy back the stock, again, it was around here when the stock was up 360, 370, that announcement came in. And of course, the stock popped and then retested the fib, but now it's jumped up to new highs. And basically what that tells us is, almost like when a CEO, like if everyone's beating up a stock, but the CEO steps in with his own money and, he accumulates shares on his own, right? A lot of these catalysts about companies or board members buying back shares of stock, usually it is a good sign. I mean, granted, sometimes they do it as the company is like slowly deflating and could potentially be going out of business. So you may actually look at the situation and say, I don't know, it looks like they're just buying shares to kind of keep the stock propped up so that it doesn't, fall off a cliff, which of course does happen. Something like Safe Bulkers, in my opinion, again, we looked at the numbers. I felt that longer term it was undervalued and it was going to grow over time. And chances are they're probably seeing the same thing as well. Now, it does look like the revenue for the year of 2023 is going to come in lighter than it was in 2022. However, quarter by quarter, the company has not missed on the revenue side since we first looked at the stock. And that's why I tell you guys, especially with these smaller cap stocks here of only like a couple of $100 million, or like they're maintaining like that 1.2, $1.4 billion market cap. Those are the companies where revenue is key. As long as the bleeding is not so immense that they literally may go out of business from it, then chances are it's only going to be a matter of time before those losses narrow and they slowly potentially try to become net income positive, but basically just control the bleeding as long as the revenue and the overall business itself is consistently growing quarter over quarter, year over year. And again, even though revenue has gone down, we have beaten on every quarter. So again, we first looked at it August 31st, right here in that circle. As we see here, beat on the top and bottom line, beat on the top and bottom line. Big miss on profitability, comes in 7.25% above on the revenue side. Beat on the top and bottom line, another miss on the profitability side, beat by over 11% on the revenue side. So this company, even though the revenue has dropped down a little bit year over year, the company is still coming in well above analyst expectations on the revenue side. And now you're seeing not only is it finally being rewarded in the longer term, but now they announced that potentially they're looking to buy up to 5 million shares of stock. Now, again, technically, according to the agreement, it is not guaranteed. They don't have to buy all of those shares. They can just do 1 million shares. But at the end of the day, for them to obviously announce it, it's good news. As we saw the pop that was on November 30th. The stock went from about $367, $370 up to almost $4 just off that announcement. And again, retested the fib there, $362, and now popped up above the next fib level of $406. And we could potentially even hit newer highs here in about the next 2 hours here before we close. So only time will tell. But again, this is not necessarily me saying, oh, I'm looking at the stock, I like it, you should buy it. Or, oh, this stock sucks, you should sell it. Like, what I try to do is, I literally try to show you guys every single tech pattern that I may be noticing. I draw out all of these trend lines so that you guys can follow along with me. I mean, you guys can easily pull up TradingView on your computers. You can pull up the chart of Safe Bulkers. You can draw out these trend lines as well, right? This isn't... I mean, listen, granted, I know I have some knowledge, some experience, and I've been making some good calls, and, I may know what I'm talking about. But also at the same time, again, this is not necessarily, oh, what's he talking about in the video? Is it a buy? Is it a sell? Right? That's not really how you guys should be looking at it. What you should be doing is you should be learning, you should be absorbing knowledge. If you're not very good with technical analysis and you don't understand why a stock would break out or what made a stock go down, you have to learn about these trend lines to see like the channel that the stock is trading in, and then if it breaks below the trend line, now you know that we're going to start chunking down, or if we break above, we're going to start popping higher. You have to learn about all of these other tech patterns as well, right? Your ascending, descending triangles, symmetrical triangles, double tops, double bottoms, head and shoulders, inverse head and shoulders, cup and handle, inverse cup and handle, right? We have all of these trading patterns, and usually 9 times out of 10, if you go into a trading Discord, that is basically what they're doing, right? They're pulling up a chart like this, They're drawing out a pattern like this, and they're saying, oh, look, it's been climbing. It looks like an ascending triangle. If we pop up and break out here, then, next stop is 420 or whatever. You know what I'm saying? So technically, they're basically doing the same thing I'm doing. Because, and again, I know I'm going off on a tangent, but it's just a little disclaimer, because I actually had a friend of mine tell me, like, oh, you should try to show people, like, how to do it, as opposed to telling them what to do. I'm not necessarily telling you what to do. Even if you go back to all of the later videos a year plus ago, I'm not telling you what to do. I'm just showing you the trend lines and any patterns I may be looking at, and then we crunch some of the numbers. And like I always said, if we see that the positives are outweighing the negatives, then we could potentially say it's a buy. But overall, again, even back here at 3.25, so what? That was about 30% less than where we are now. That's what I mean. The market cap was around like 330, 350 million or something like that. The dividend yield is beautiful here at 5%, right? I mean, that's not even really an opinion, right? That's more of a fact. I mean, someone paying you 5% to own shares of their stock, that's not too bad. And also at the same time, the company's trading at a PE of 6, right? So you could even conservatively say, oh, with the markets, raging and everything being healthy and our economy being good. Now, granted, I understand this company's based out of Monaco, but still, you could say, all right, even if this PE could easily get up to maybe like 9 or 10 conservatively, right? Now you're talking about like a 50% increase from where we currently are, which would be about $6 a share. And remember, you could be viewing a metric like that, and you could be looking for a higher number, but you could be doing so conservatively. And it doesn't always work out, obviously, as you're seeing, just like you see with technical analysis, right? I always say time and time again, they did that study, I forgot where it was from or whatever, but again, they tracked multiple stocks forming, I believe it was bullish flag patterns, which technically is a bullish indicator, obviously. And they were looking to see how many stocks actually broke up and made profits off of the predicted tech pattern of Bullhammer and which ones failed. And they found, I believe, that only about 55 to 60% of the time, I think it was like 57 or 58% of the time, that it did work out, right? So think about that. Everyone tries to tell you, oh, numbers are for old heads. No one looks at fundamentals anymore. Markets are all electronic trading. You should only be looking at tech analysis. The numbers don't matter. Learn your charts. Learn how to read charts. All right, well, listen. I mean, bull hammers and bear hammers are a big indicator and a big tech pattern that is on the list of tech patterns. And if you're specifically looking for, 1, 2, 3 tech patterns, as you see, if they're only right 55 to 60% of the time, well, listen, not to come off too cocky or too arrogant here, but my success rate is higher than that. And it really doesn't even matter what the chart is doing half the time. I mean, of course, again, I mentioned if the numbers look good and the technicals look good, now you have that perfect storm, blah, blah, blah. And of course, granted, over the longer term, we could see like a long-term, right, neckline. This almost looks like a long-term inverted head and shoulders, so we can understand how it popped out here. But also, at the end of the day, that's what I mean. If you look at the numbers, and of course, you're able to buy for time, right? I'm not talking about options trading. That is what makes it more risky. If you asked me here, 14, 15 months ago, whatever this was, if you asked me here at 3.25, if I turn around, 12 months, 18 months from today, should SB be trading higher? In my opinion, I would have said yes, because even now at 409, I feel that the stock is still tremendously undervalued. But able to make that call in general is obviously much, much easier than trying to determine the exact time frame in which it happened. Even US Steel, perfect example. We looked at it, it was sub $20. I said overall, it's a buy. It went a little bit higher, then all of a sudden it breaks down lower. Over time, it starts climbing back up into the mid-high 20s. Boom, then bids come in 35, 40 plus, 55. Now all of a sudden we're off to the races. 150% return long term. collected dividends the whole time, and now you're also paying long-term cap gains tax as opposed to short-term cap gains tax. But again, U.S. Steel, in my opinion, looking at the numbers, over time should be growing and should work out for you. If you asked me at that time when I made the video, okay, U.S. Steel is at 1970. Where's it going to be in 2 weeks? That's when my call expires. Like, there is no way for me to know that. There is no way for me to know that because, again, even as much as people love their technicals and their resistance levels and their pivot points and their price targets, at the end of the day, nothing is guaranteed. So even when we try to look at the technicals and the charts and try to time some of these options plays, we do end up taking losses or, worse, having them expire worthless. So again, nothing is set in stone, which is why I said in my original videos, when looking at some of these stocks, if you're not really in a hurry to make immediate profits, and you know that chances are, over the next 3, 5, 10 years, you're probably still going to be, working a job or building your business or in your same career field. And, you're going to slowly be able to bring money home. And every week or every 2 or 3 months, you're able to take a couple of bucks and add it to your investing account, right? Chances are then your investment time horizon is longer term. Which is why I say there's, if you're making decent money and you have some extra funds and you want to roll the dice, with some naked calls on, Verizon because they're about to post earnings or something like that. Hey, listen, go for it, If you can handle the risk and take that loss and it doesn't, completely set you back by like 3 months or something, then yeah, go for it. Roll the dice, take a shot. But also you have to understand the risks involved. That's why I tell people all the time, that they try to ask me like, oh, what's your price target? Or, oh, where should the stop loss be? And all this, blah, blah, blah. Everyone's financial situation is different. And if someone's going to tell you like, oh, I like Campbell's soup, I'm looking for $45 in the next 30 days. Like, if you're going to take the options position, you need to know from day one that you can be completely wrong and this could expire worthless and you can lose the position. And that's the problem. I feel like a lot of you not only do not understand the risks involved, but also, in my opinion, you're investing the wrong way. Because I have people who were like new to investing with a couple of $100 or a couple of $1,000, and they really can't afford to lose it. But also at the same time, they really don't know anything, right? They're still new to the game. And we all know that what you should be doing first is learning, reading, learning about the patterns. Learn, what is market cap? How do you find the market cap? What's a PE? Okay, and then you look up what's the average PE for a transportation, shipping company in the sector. Oh, it's between 10 and 12. Well, this one's at 6, and it looks like revenue's growing and they beat earnings, right? That's how I come to these conclusions. The channel, the videos, it's not like you're shaking the magic 8 ball saying, should I buy SB? Yes or no? Like that, that's not what it comes down to. And that's why, just like I used to tell clients on the phone, bro, people used to like insist on these guarantees or, oh, you're telling me to buy this stock, so I'm assuming it's at the low of the lows. Like, listen, Mr. Smith, first of all, take a step back and you need to understand the risks involved. And I would literally tell every single person, you are buying this stock today, the company could go out of business tomorrow and the stock could go to zero. Do you understand the risks involved? And we've seen it happen. So that, I think, is part of the problem. The problem is, I feel like people are working hard, they're able to save up some money, and then, they have like $300 or like $2,500, and they're going about it the wrong way. Because what they're not telling people, like myself, or even people who run other trading discords, and like sell their courses to you for like $20 or whatever. Again, I'm not knocking them. Hey, listen, do what you got to do. But also, at the end of the day, if you have like $2,500 and it took you like a while to save it up and, that's a lot of money to you and you really shouldn't risk it and you really can't afford to lose it, oh, but how do I do, options? It's like, no, chances are you probably shouldn't be doing options, in my opinion. Right? You're telling me you're struggling to make money. It took you a while to build up that amount. You really can't afford to lose that amount. Based on what you're telling me, you should not be doing stock options. That's actually more of a fact than an opinion. And I can almost guarantee if you ask other finance YouTubers or other people running trading discords, or even if you call up an advisor at Schwab right now and ask them what you should do, I can almost guarantee that every one of those people, whether I agree with the way they do business or not, are probably going to say, no, based on what you told me, you should be looking for like bonds or like blue chip stocks that, will maintain their value and pay you to own them. So, over time, you should preserve what you have and potentially slowly grow it. You shouldn't, you're probably not going to wake up next week and be down 70-80%, right? And that's what can happen with options. So anyway, went off on an extreme massive tangent there. But again, this is why, in my opinion, most of you should be trading for the longer term, in my opinion. Because again, not only could it potentially, you could say, it could eliminate a lot of guesswork, and of course it could eliminate the short-term volatility stress, but also at the same time, again, if you're looking for the actual numbers and the growth of the business, all you really have to do is just put 2 and 2 together and just follow the money. But again, the way I look at it, we look at the debt, we look to see if margins are rising or declining, and we can see that revenue, again, has chunked down from the 80s and 90s down here into the 60s and 70s. However, they are consistently coming in above these expectations here. So, that's a positive, right? I understand the profitability got cut down. But technically, the company is still putting out some positive news. And now it looks like the yearly revenue is going to decrease for 2023 from 2022, right? So it looks like these were their breakout years for the time being. Now for 2023 and potentially even 2024, the company may now take a breather, calm down, reposition, the stock may consolidate, and then down the road, we may take another leg higher. But I just want to lay out, I'm not necessarily making these videos to, just to say like, oh, this is a buy, oh, I look like a genius. I mean, of course, if I say, in my opinion, something's a buy, and then 6-12 months later, it rallies and jumps to new highs, you better bet your bottom dollar I'm gonna make an update video, and I'm gonna pat myself on the back a little bit. Absolutely. Absolutely. And again, I am man enough to admit when I'm wrong. I looked at stocks like Nvidia. I said it was overvalued. It kept climbing. I looked at Palantir and said it should hang out and remain flat, and it exploded. I looked at, what was the other one? Eli Lilly. I remember I did a video on Eli Lilly. Now, granted, again, I understand it's a more expensive stock, right? Several $100s a share. Usually those stocks, those videos don't get as much attention as, in my opinion, I think they should. But on the flip side, something like Eli Lilly, I think it was like mid or high 300s, and I was like, it looks a little overvalued in the numbers. I wouldn't be a buyer here. Now I think the stock is well over 500 or something, right? So that's what I mean. I get them wrong also. But again, to my knowledge, the only person who really outperformed Warren Buffett recently was Nancy Pelosi, which of course is a whole separate argument in and of itself. But again, to not follow basically the most successful investor that we've had in this country would be foolish, in my opinion. It would be foolish. And if you want to take, 10-15% of your account value and you want to do, some risky option plays and try to generate some short-term profits, that is entirely your own prerogative. But in my opinion, the bulk of your assets should be invested into longer-term, quote-unquote, concrete, solid, stable, end-quote, companies. And again, that's what I'm looking at here with the company bringing in $350 million in revenue last year, making 50 cents of every dollar, but the market cap was basically in line with that revenue number. That's what I mean. That's a joke. That's a joke. You can conservatively double up that revenue number. And you know I'm being conservative because we've looked at other companies that are trading, 13, 18, 28 times yearly revenue. So me saying that it should be double is not too aggressive. I'm sure you can agree with that. But annually, let's look at annually, right? So for 2023, estimates of 264.41 million. So lower than where we came from, right? I do think, in my opinion, they actually end up beating this number, because if we switch over here quarterly, for Q1, 2, and 3 of 23, we have 67 million, 70 million. That's 137 million in change, plus 64. So now we're at like 201, 202 million. And they're estimating 74 million. So if they kind of come close or in line, or, based on history, they probably should beat, but it's not set in stone. But let's just say they post right in line, 74.03 million. We're looking at about like 275 million for the year, which, as you see, is about 10, 11, 12 million above analyst expectations for fiscal year of 23. So even though it did dip down, it's coming in above expectations. And now you can see it doesn't necessarily immediately reclaim those highs of revenue, but you can see that revenue is expected to start growing again above 291 million, 318, 362 million. And the way I'm looking at it is, hey, if we're about to bring in, hopefully, 275 million potentially for 2023, how about if we just double that number? We're talking about a market cap of about 550 million, right? Which is about a 20% move, we'll call it, from where we're currently trading now, which conservatively would bring us to about $5. Now again, based on what I just said, I mean, you could easily do that. Right? I'm not claiming to be some sort of stock genius. I'm simply looking at how much money the company is bringing in and how much we currently are worth. And again, usually it seems like if you buy a company that is undervalued in the numbers, that of course has more positives than negatives, then chances are, over time, you now have a very high probable chance that the stock will grow in value and you will end up making money. But I don't want to beat a dead horse. I already went off on a tangent, but just wanted to show you, some of the things I'm looking at here. Let's look at the pivot points here on stock charts. We can see on the daily, next resistance, 417. We had the MACD just cross to the upside. So, I mean, it could immediately jump up to 417, could take a day or two and then pop to 417. RSI was up at almost 72 there on the daily. So that's why we could potentially take a breather maybe for a day or two. RSI on the weekly as well, over 68.5. So we are approaching that 70 benchmark. So that's why we could potentially have like one more pop, one more big jump up here, and then the stock could start pulling back. The MACD has been climbing here for the last several weeks. Next resistance level on the weekly, 423. And I wanted to show the pivot points because obviously with the stock climbing, if we look at the Bollinger Bands, we can see that we are well above the top Bollinger Bands on the daily and the weekly, I believe. But if this is able to get to a close of 410 or potentially even higher, we could potentially be forming a little bit of a bullish hammer, kind of, sort of, that can help bring us higher. But, of course, only time will tell. Right now we can see resetting RSI on the daily now about 72. We're well above the top Bollinger Band here. So that's why I'm saying the stock could easily pull back a couple of cents and just kind of hang out for a day or two, let all of the technicals catch up, and then it could take the next leg higher. But even going back from November here, you can see that basically from about the middle of November. So it's been maybe about 5 weeks straight now. The stock has been well above and showing strength of that mid Bollinger Band. So that's why I think right here is something, like, if you're asking me right now, in my opinion, you Worst case scenario, you can see a drop back down to the mid Bollinger Band, 381, 382, but I really feel like it shouldn't go much lower. I mean, they've been beating earnings. They just announced they're buying back up to 5 million shares of stock. I mean, I don't know about you guys, but to me that sounds positive, not really negative. And again, I'm not a genius. I'm not doing what you can't do. I'm looking at charts, seeing if I see patterns. And of course, I'm looking at some numbers. How much revenue are they bringing in? Are they profitable? Right? This company pays a nice dividend. How much revenue are they bringing in? Okay. What's the value of the company right now? Okay. In my opinion, it's, undervalued. And again, we all have different ways to look at it, but sometimes, that's why I always say, sometimes, like simple logic and common sense could work out better than trying to look at, 98 different indicators and paralysis by overanalysis, as they say. Sometimes people sometimes people find a situation that they like, and then they continue to dig so much and overanalyze that they actually end up talking themselves out of the situation. So, of course, every day is different, but hey, long story short, I mean, we're talking, even if you went all in here at 3.25, we're talking a long-term hold, getting paid 5% to own it, and your principal is up, 30% here long-term. So that's why, even if you wanted to get out here at these highs, you're making 33%, you got paid 5% the whole time to own it. And now, of course, you're paying much less in taxes. So, I don't know about you, but in my opinion, I chalk that up as a win, baby. And I'm going to end it there. Once again, Stocks by the Numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. Discord link in the description of every video. You guys want to come in, you want to talk about stocks, you want to BS a little bit. I really don't care. Everyone's welcome. Just do me a favor. Don't come in and just start busting chops, because no one appreciates that. But anyway, moving forward, like I always say, I understand that markets are rocky and volatile and uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. I want to thank you for stopping by. This weekend, we're going into Christmas Eve, Christmas Day. I know, Hanukkah season, it's holiday season, so I want to wish everybody Merry Christmas, Happy Hanukkah, Happy Holidays. And I hope you all have a good weekend, happy and healthy with the family. Enjoy yourselves, and I'll catch you in the next one.